In what equity sector is Sonova classified by index providers?
In the medtech industry.
Have you witnessed any insiders trading the stock in the past 12, 18 months?
So yeah, actually in the past 6 months, one of the board members sold a huge stake of 2.5 million stock and lowered the stake from 6 to 4%.
You mentioned concerns about the ending of the buyback program having only been half, or only half of the buyback program being completed. At what share price was this, or why were you so concerned about that?
Actually, it was not about the completion of the share buyback, but the inauguration of it. It is 500 million in a time frame of 5 years, but analysts expected way more, up to 1 billion.
And did the board put a price ceiling on the buyback scheme?
No, there was no ceiling on this, but it was limited to 10% of the shares outstanding. By last Friday, it was 0.78% repurchased. Yep.
Do you really think that's a concern, that that's still a large segment of a company to be involved in a buyback program? So is that really a negative signal on the company?
That's why we said that it might be a negative signal, but yeah, of course. So if they know, they assume that the share price is trading at it's overvalued. It might be not in their best views to buy it.
It's actually part of the total share buyback program, which includes dividends and which includes dividends on the stock. So they're planning, as they have a lot of cash currently, they are planning to give it back to the shareholders.
What's the typical cost of a hearing aid?
According to the analyst we interviewed, to the audiologist, he said that it was ranged between 1,600 Swiss francs and 9,000 Swiss francs.
And what's to be paid by the client, and what's paid by the health insurance scheme?
That varies considerably from each regulatory background. For example, last year there were amendments in Germany that pushed sales there, and in the UK as well, whereas, for example, in the US, the Veteran Affairs is a large volume buyer.
Maybe question on competitive positioning. I think Siemens, which was number 3 on your chart, is selling their business or is looking to sell their business. Do you see that as an opportunity or a threat for Sonova?
It has already been sold, actually.
So do you think that will change the competitive dynamics, or doesn't matter for your investment case?
Not yet, because it has been sold to a private equity firm. So it is expected to be sold back maybe in the longer term.
What do you think the market is getting wrong on the stock? Obviously, when you look at the EPS forecasts, the market is also quite negative in terms of expected EPS growth. Why do you think they're giving a premium valuation to the company?
Maybe they perceive the sales, for example, of the overall industry as being too optimistic. As Ludovine mentioned, there is no such a reason to be that optimistic, and therefore the sales will decrease for this part. And also for the margin, they are quite optimistic on this, especially for the R&D that David talked about before.
What's the dividend yield on the stock?
It changes every day, but it's oscillating in the range between 0.0 and 1%. 0.9, excuse me, sorry. 0.0.
just maybe you can talk through the patents that they have versus competitors. Is that a big driver with regard to patents falling off in the next few years?
As the innovation is going very, very fast, they don't have patents on their products, and they mainly just try to be ahead of their competitors.
Maybe one important thing about this is also that product offerings is really converging nowadays. So competitors have pretty much the same products. It's taking maybe half of a financial year for them to catch up with the new technology. So this is also part of why we believe in a decrease in R&D efficiency in the future.
So given what you know about their, about the company and their innovative capabilities and so on, where do you think is a good entry point to buy the stock?
Could you please repeat the question, maybe?
Yeah, how far does the stock have to go down before you start buying it?
So right now we have a target price of 111, and our target price was 122. So in order to buy the stock, you would have at least to have a 15% upside from 111. So I think the stock should be dropped to at least 100. But then you will have also a hold position. But right now it's really a sell.
Maybe looking at the markets, you indicated that emerging markets or Asia is a big growth market, but they are less exposed there. What's their strategy to improve that? And is that the biggest risk to the investment case potentially, that they do succeed there?
So yeah, I think that's definitely a risk to the investment case, because penetration rates in emerging markets are very low, just like, well, maybe even more than in other markets. And the fact that that they offer really good growth prospect might be a risk to our investment case in the sense that we might have been too bearish on this analysis. But in our view, penetrating further these markets will require huge price concessions, which will offset the volume growth, actually. So this was our view and the way we forecasted our sales growth with respect to emerging markets.
Do you see a lot, talking about the emerging markets again, do you see a lot of domestic competition within emerging markets, obviously at lower production costs, or is that an issue?
Recently, we have seen competitors in China called Nutriton, which produces cochlear implants, which are one of the most premium products Sonova offers, at really low prices, at 10% of that price charged by Western producers. It's true, but the cochlear implant is very sophisticated, so we see this not as an actual threat right now, because there are large tenders for Western cochlear implants, even in China, right now.
We can actually have the same idea on the hearing aids market, as they have some companies that sell for like about the equivalent of $10 in China, but the products don't have the quality, a similar quality to the ones of Sonova, so they're not really a huge threat.
Maybe on the financials, I noticed that the gap between their peers on EBIT margin is much smaller than on return on invested capital. So can you explain what's going on there?
Yeah, the balance sheet total of Sonova is much larger, but in the coming years, it is expected to trim down due to this total shareholder return and the affiliated reduction of cash, for example. And referring to the past, in 2012-13, there was a large product callback for Sonova, and they had to ramp up their provisions for this by 198 million. So that increased, affected the comparison in the recent years.
There was some mention of, I don't have time left, some mention of consolidation within the market and recent changes. Do you see...
Mais où les mics?